Happy Tuesday. We welcome you to the Investing Master Series. My name is James Boyd. Alongside with us is our good Canadian friend, Barbara Armstrong. We got to give her a little hard time. She does such a great job. It's great to have her with us. And we'd like to welcome all of you here today. Will, Dom, David, Morali, AP514, and many others. Good morning. And welcome to you. Yes, there is an Apple event. It's not a recommendation as I said that, but it is just news. Okay, so there was a comment actually on that. I do want to kind of make mention because now sometimes we kind of there's the expectation of what's going to happen and there's the reality, but it will be interesting to watch, especially if you're a technology person. So let's just want to kind of make mention there was a chat on that. It's not a recommendation. Some of you are Samsung people. We love you all. And but some of you might be those users who might be looking to see what is maybe some new potential products going into the Christmas season. Now, just real quick as we get started, you can follow Barbara and myself on X. We do post educational content, and from time to time, we do kind of post pictures. This is Jax, and I wrote, whatever Jax wants, he gets. And he loves going to the grocery store. Okay, so just real quick. Now, a couple of you have asked, I'd really like to see Jax on a webcast. I'm not sure if he could come to the webcast per se. One time he about busted into the door, the room area here, as there was lightning. So if he is a guest, he will be because he pushed through the door. But I will ask, okay, I will go above and beyond me to see is it possible to have a special guest. But I did read your comments in the surveys, and I'm all for it. Now, just real quick as we get started, remember when we talk about stocks and options, remember that options carry a high level of risk and are not suitable for all investors. When we talk about the information, it's provided for general informational purposes only. It's not considered an individualized recommendation. What we talk about is examples and strategy and how to practice that. We practice that in the Paper Money account for educational purposes only. Some of the strategies that we talk about, you might not be interested in. Others, you might say that interests me. You decide for yourself. Also, remember that investing involves risk, including loss of principal. When we also talk about investing, remember some of the times we do short options like covered calls, or let's say selling puts, things like that. Remember that with those short options, these American style options that we trade, those could be assigned at any time prior to the expiration, regardless of the in-the-money amount, okay? So that just means, in essence, if we had a covered call, someone could take the shares prior to expiration, but you still get all the premium. You sold the put, you could actually be assigned to buy the shares at the strike price, but you still get all the premium. So just kind of need to know that. I don't think that's a news flash, but for some that might not know, we want to kind of repeat that. Now, today we will take a quick look at the markets. Second, actually, you want to take a look at current positions. We need to discuss this. And I want to kind of talk about maybe some of a negative on options. Sometimes when the market goes up, you tend to be right a lot on your positions, but it actually does leave you with few positions. So options, for example, really have expiration. They could have max gains, max losses. And when you're in a position that's winning and winning, you pull them off and you restart that risk potentially over again. And I want to kind of talk about that here today. And I don't think that gets discussed enough. Then we will talk about some new examples and we're going to kind of focus on some stocks that could be snapping back to the upside, and got a couple stocks also kind of showing some ascending triangles. So first off, just real quick, let's take a quick look. I'm going to let's go to the list just real quick, okay? And I don't know, I like to see both, okay? So in a list format, why do we like the list format? Well, we can kind of see we can see the percentage change, we can see the week, we can see the month, we can actually see what type of trend it is. Again, that type of trend is important because it's probably going to tell us what we're going to see on a broad basis. We could also see what we talked about yesterday, whole moving averages. Are the moving averages green, and are there actually crosses, etc.? So first thing that blinds me, I can't see anything now, but I'll take it. When we actually see, for example, that there's a lot of Christmas tree green on that, lots of trend threes, everyone say with me, and I mean it. If I can't hear you, it means you ain't saying it. Hallelujah! Okay, now, if we take a look at this, so seeing those trend threes, that's not bad, okay? That means the price is above both moving averages, not in an area of resistance, okay, at least right now. So that's not necessarily bad. Now, if you take a look at this, we see rates actually in trend one. We actually see VIX tippy-toeing in trend two. It's up, but not really by a ton, okay? But there could be some possibilities there if we see trends in trend three. Now, the biggest thing is when we talk about, let's say, anything like brand new holds, we're seeing those there in the Dow Jones and in the semiconductors. We're also seeing that in gold, another hold. That sounds like a broken record. And you're seeing a bunch of crossovers here today, and you can see those right there, and I'll list those, okay? So that's why I kind of like to list, we kind of see some different things in one view. Now, if I pull up this chart, let's pull up the SPX first. The SPX still Friday was really the high. Today, holding here about par for the day. Moving averages kind of sitting at this potential threshold of a crossover. Can it hold that? Okay. Now, from Friday, some of the economic data, it's kind of been some mediocre data fundamentally, okay? And haven't had a whole lot here to push us up through. However, we did make an intraday high. If we kind of said, is there any index that looks a little bullish here, it's really probably the NASDAQ, okay? I mean, if this market's going to go higher, many investors like to see the NASDAQ and the Russell lead. The growth areas, higher beta or higher volatility. This is something to kind of watch. Can we continue to see the NASDAQ hold itself above that moving average? You go back to the Dow just real quick. Looks like the S&P. One thing we would say on the Dow is there's kind of been really a couple wick, kind of intraday lows that have been pushed back up. Now, just real quick, can anyone tell me one of the stocks we talked about yesterday that was getting a little push, a little breakout? We don't ever really bring it up, Harley. I'll let you buy a vowel, okay? Starts with a U. Fill in the blanks. 3 letters. I'll give you the vowel, okay? Investing a fortune here. It's UNH. And that UNH, if we pull this up, this is the one we said, hey, we're going to keep an eye on this. I did post about this earlier on X today, as you've hopefully followed along in following that post. They're educational examples. We said, hey, this is probably not going to be a surprise to see this actually break the resistance. If we go back to where it was yesterday, you're going to see that kind of that was a crossover. That was yesterday, okay? And what you're going to also notice is we get a little gap here. Now, we'll come back to that in just a sec, but that's helping the Dow out. And hopefully, as you did your due diligence here today, your routine, you should have saw that. It was right at the top, hard to kind of miss. It was also kind of, if we go back to the market watch, let's go back to the Dow list as you do this as a routine, okay? You do the Dow, and we actually look at this by percentage change. UNH is at the top, and what you're going to notice is a couple things we see immediately. Name the one stock, not 10, not 5, one. Which stock, for example, is hitting a 20, 55-day high? It's yours truly, UNH. Now, right now, what is another stock that's hitting a 20-day high? Yours truly, it's Goldman Sachs, okay? Now, I want to come to Goldman Sachs, and I want to come to Citi, okay? But that's just kind of follow through what we're talking about yesterday. We'll bring those up as well. Now, briefly, when we look at sectors, and I'll just look at this from a quick list perspective, when we look at that sectors, anything standing out? Well, energy getting a little push, but it's still in the range. Financials holding up a little bit. I want to talk about, there's some stocks in there that are kind of standing out. Communications is still there. I think the one that, now, by the way, let me ask you this question before I just kind of just blurt it out, okay? Is there any sector that might be on the cusp of a breakout here? Any sector that's showing a little strength? Any takers on which ones are showing a little strength? Now, remember, when we look at this relative strength, this is relative strength. This is the ticker compared to the S&P 500, okay? So in other words, we're looking at different durations of time and wondering, is there anything that's showing strength over different durations of time? Well, if we looked at gold, I mean, again, this goes back to gold's been green for a while. It's not new, okay? Second, If we go back to also IXV, now, by the way, IXC, let me say this first, okay, right there. It's been green for a while, but the one that's kind of up in there that hasn't been is really the healthcare. Healthcare. Now remember, it's been pushed down a lot. But if UNH is actually going up, could that actually help the space? What percent of the healthcare is UNH? Okay, UNH goes up, could it drag up the space with it? So we said UNH yesterday. I think we have to add to the list probably healthcare in general. Okay, now remember, that's probably been an area that's been underinvested in. Why? Because there hasn't been a trend. Pretty simple. But if you go back and really look at this, it really looks like, now Barbara would say, that this is where it's kind of fun, okay? If you're from Wisconsin, okay, or Canada, they would say something like, we say flag, and they say what? How do they say flag? Now, by the way, I love accents. I was born in Lincoln, Nebraska, lived in Ithaca, New York, then actually lived in Bowling Green, Kentucky, then actually lived in 5 places in Austria, then northern Germany, and then Salt Lake City, Utah. I love accents, okay? So I'm not making fun of anyone, okay? Yeah, they don't say flag, they say fleeg, okay? Bull fleeg. And if you take a look at, let's say, the bull fleeg, you're actually really seeing this big root move to the upside and a shallow pullback, okay? And by the way, that shallow pullback, where is it actually doing the shallow pullback? It's doing the shallow pullback right in the area of, how do they say it in France? Resistance and resistance. Okay, now if you take a look at this, why is it actually making those higher highs up at the resistance? Oh, because many investors think it could go higher. Now, do they know for sure? No, that's why they actually do position sizing. That's why they set a stop. That's why they actually take a calculated risk and so on. Now, if this was Friday, and we were doing the ETF class, we'd probably say, hey, could the investor consider buying the sector in general? Buy the individual stocks. Now, in this class, we can't buy the sector. So let's say for our first trade example. Now, by the way, is anyone else having fun besides me? Yeah, I really am multilingual. Okay, my son, he was down in Ecuador. My other son was in Madrid, Spain, and his wife was in Madrid, Spain. Yeah, so I do kind of get that influence. A little different languages. And I would actually have to say where I became multilingual is in Bowling Green, Kentucky, okay, when I moved from Ithaca, New York. I went to the local gas station there, the BP gas station in Alvin, Kentucky, and that's when I realized, man, I didn't have that much culture until I went to that BP gas station. And love those people to death. My gosh. Okay. Now, let's go to UNH for just a second. Okay. Now, if we looked at this chart, we might say, well, yeah, it broke the area of resistance, but, we're at the next resistance. Okay, fine. All right, fine. Now, again, the investor is probably not trading just the move to 355. And this goes back to the gap down discussion about a month ago, right? Now, by the way, if you look at Lennar, if you look at DHI, if you look at, let's say, what is the other one? Toll Brothers, there's been many of these stocks where they break inside the old channel and they go to the next target. If you go look at DHI and Lennar, you'll see stocks that broke a resistance and they went to the next resistance and they use that as a short-term profit-taking tool. Just go look at DRI and LEN. Now, what I'm going to do is on this trade is we're going to try to be a little bit more aggressive. Now, what do you mean by that? When I say a little bit more aggressive, I'm just saying in this case that we're going to take something that has a higher potential upside compared to, let's say, something that's more probability based to be potentially right, which means lower potential income or credit. Now, I'm going to go to the 17th October. What I'm going to do here is I'm going to go look at, let's say, now, by the way, it's a $334 stock. The 17 Octobers, these actually have a little wider bid-ask spread than maybe some of us would like. Now, it's not because there's no volume in open interest. There is, but it kind of looks like there's a little bit, now that's 55 cents too there. It's just a little wider. So if it's a little wider, in this case, we're going to want to make sure we're going to try to get filled at the mark, which is in between the bid and ask. Now, if we buy the 330 and sell the 340, long call vertical, okay? So a $10 widespread, 463 credit, no, debit, excuse me, go back, debit. Now, that represents the most the investor could lose, given the vertical. $10 minus 465 is actually going to give us the max profit here, 535. Hey, where'd Barbara go? She didn't say anything about the fleet. Did she say anything about the fleet? Barbara, okay. This is what's fun with Barb. The worst thing about Barb is she knows where I live. So she knows I know where you live. I'm coming over afterwards. Yeah, I got to do this to Barb. Barb, she can take a lot. Okay, and that's what is so fun talking to Barb. Now, here's the deal. Let's go ahead and actually, we're going to do one contract, okay? Max profit, max loss given the vertical. There's the commission. And now what you're seeing in this case is we're going to go ahead and send that order. So trade number one here is we're going to try to go long, okay, the UNH, which is kind of a play in the healthcare space. Now, by the way, I'm also going to set a target on this trade. Now, why? I don't know if you happen to see DRI. No, DHI. I don't know what it is with, let me tell you, keep getting that messed up. DRI's Darden's Restaurant, which has Olive Garden, DHI. So when this actually broke the resistance there, notice how when it went into the area of resistance for the last 2 days, some shorter term traders, don't act like it wasn't you or someone you know, they sell into the area of resistance. Now, by the way, you might say, well, why would they do that? Well, from this resistance to this resistance, that was like a 6.5% move. Traders, they love those 6, 8, 10% moves that might just happen in a few days. Now, that doesn't mean the trend is over, but those short-term traders had a goal in mind to go from resistance to resistance, and if we went to the next resistance, they're going to profit day. Now, does that mean the trade is over? Well, a trade is over if you actually had a target, and you're going to see that it doesn't necessarily mean that the trend is over. And you're going to see the same thing. When it actually broke the resistance, what did it do? It went to the resistance area, and some investors use the resistance as a place to sell, and sell some more. But that actually selling pressure could actually just flip it from old resistance to new support, and they try to play that bounce again. So these shorter term traders, they're really just playing levels. Okay? Don't be a hater. Don't be a level hater. Don't be mad that other people do that. You were taught the same thing, and if you want to do it, you could do it for yourself or practice it in the paper money account. Don't be a swing trade hater, okay? Everyone has a different goal. Now, I want to go back to just real quick. So trade number one we actually looked at is UNH with a play in actually United Healthcare. I just want to bring up just quickly, I want to ask ourselves a question. Is there any other stock that is actually getting a little push in healthcare? If we kind of looked at the S&P 100 for just a moment, it's really UNH right now that's leading the way. Now, CVS fundamentally has been really tough, but has actually been having a pretty decent uptrend. We haven't talked about that a lot because there's been other things to look at. And then we also have Lilly that's getting a push. But right now, it's really UNH. So again, we're looking for leadership from the UNH. Does it influence actually the healthcare? Second one that we actually want to go to just real quick, which a couple of you have asked about, okay, is Meta. Now, I don't know about you, but sometimes when we get these stocks that, for example, have gone down. Now, I'm going to kind of draw this line maybe a little differently, okay? So in the trades, what you're going to notice is we can't see the future. And when we look at these highs to a lower high, etc., what you're now going to notice is if I drew the line touching the top right of the bodies of the candles. Now, why the top rights of the bodies? Well, because that's where you had statistically more touches. When you look at, let's say, highs or upper shadows, it's the extremes, okay? So we know that lines, horizontal and diagonal, well, they can, for example, be, if we're talking about horizontal, we want to kind of say, where do we get more touches? Diagonal, where do we get more touches? We go back to where we were 2 days ago on 9.4, or just a couple days ago, it actually did have a crossover. Okay, now I'm going to play the game of we missed the trade. Okay, now there's this question for everyone. What would be a potential setup to get in again? What would you be looking for? Now, I'm going to take it a day at a time. Now, the very next day, red candle. Oh, sign of weakness. Sign of weakness. Don't get in. Okay. Now, remember, if you have that psyche and that's how you think, it's going to be very difficult for you to ride trend. Very difficult. How do I say that comment? Because that's the way I thought. And I'm telling you, you're going to have a tough time riding trend. Now, remember, we said red candles above moving averages don't scare good investors because they actually know that sometimes not all candles are going to be green. Red candles above the moving averages mean it might just be pausing to pulling back. The key is, does the price or candle stay above C4? Now, go back to now remember, when you get the breakout day and you actually see red candle, this is now setting up what? I can hear it. Call hold. Now, we're going to go the very next day. And we're going to look and see, can the stock get above the high of the low day? Let me see. Now, if we go back and take a quick peek, did this close above the high of the low day? The answer is no, it did not. Second question, did this trade above the high of the low day? It sure did. And where did it trade above the high of the low day? At 758. So what it did is it went from 758 and it went to about 766, went up about $8 above the high of the previous low day. If someone had like a buy stop order, they could have triggered that and it went up and it closed lower. Now, this is a perfect example that just because you get an entry doesn't necessarily mean it can't fluctuate. And it did. Now, if someone said, James, I had a buy stop order at 759, I felt like a genius after I got in. And by the end of the day, now I realize my entry didn't work. Well, it just went lower than where you bought it. Okay, it doesn't necessarily mean your entry's not working, but it is testing how much you're willing to risk. We now go forward to the very next day. And now what you're seeing is, if we look at this, why is there a green dot there? Well, because again, it's trading above the high of the lowest, most recent red candle. Now, I want to kind of bring this in. We have a resident expert of bull fleeg. So if we take a look at this, could this also be a bull fleeg as well? And you could say in the shorter term, yes. So if we actually look at this, what you're now going to notice is a little run to the upside and a little pause. Now, here's the thing. A lot of investors say, I want deeper pullbacks. Do you? Do you really want deeper pullbacks? Well, not if you're in them, okay? You don't want deep pullbacks. You want shallow pullbacks. You want shallow pullbacks in percentages from the high. You want shorter duration pullbacks, especially if you're in it. Now, if you're looking to get in, you're saying, hey, look, I want to try to get in. And for example, I want to maybe just get this 1 down day, 2 down day. Day 1 is the lowest red candle. And if we're trading above the high, this is again tall hold. So if someone got in yesterday there, it closed down. The very next day is pretty much back to probably where that buy stop could have been. Now, what I'm going to do in this case is we're going to buy the shares of the stock. I don't want to think that every one of the positions is going to really be doing a option trade on it. Some of you might not trade options. Now, what I'm going to do is I'm going to right click on this chart. We're going to go down to buy custom. We're going to go with OCO bracket. Before I do, is there any place on this chart where you would set a stop? Is there any place on this chart where you would set a target? Okay. Now I'm going to do a bracket order. And what I'm going to do here is I'm going to go back and we're going to pull this up. And some investors might say, James, I'm just trying to go for a little swing. Some of you call it a swing trade back up to that high. Now that's about, if we put it at that area, it's going to be about what? 7, if we talk about the bodies of the candle, about 790. That's 30 points there. That's not a 6, 8 to 10% run, but some people might just be looking for smaller moves. If we said support, some investors might say, James, I'm going to use the moving averages, okay? Moving average as a potential support area and try to set the stop below there. Support is 751.32, less 2%, and that's going to give us 741.55. Are you with me? Where do we get the 751? That's the moving average. And where do we get the 9? Okay, so that's a little off. 751.32 times 0.98. That's 2% less than 751.32, which is the moving average. And that's going to get us 736.29. Sorry, I fat fingered and added a 7 on the back of that 8. So 736.29. 736.29. Okay, now it's up to you. Does the investor like to set tighter stops, or do they like to actually set a little looser stops? Now, what I'm going to do is I want to kind of go back to this. This account is sitting at about 115,690. Let's just say 7. I'm going to kind of see the number. If the account balance goes higher, and if we say, look, we're willing to risk, let's say we're willing to invest 5 to 8% of the capital. Well, let's say we just kind of invested in the middle of that. Maybe, let's say 5, 8, 3, 6.5%. So let's say we said, look, I'm going to invest 6.5% capital of the 115,600. That's going to give us a capital size of $7,500. Now, $7,500 is higher than where we started the year. Why? Well, if the account balance goes higher and you're willing to invest the same amount, the position size could be going higher, like it is right here. So I'm going to type in $7,500. Now, if we type in $7,500, now we see in this case, pull this up, there it is, it's going to be about 9.86. Now, if we're so dead gum close like that, we're just going to go 10 shares, okay? Now, 760, 790, 736. Remember, the target and the stop are not valid until the order is filled. Second, if we actually set the stop, that's saying it's going to be triggered to be sold at that price, but it could be filled lower. The same thing with this order. We're saying sell it if it goes to 790, but wonder if actually this gaps to the upside to $810. Could it be filled at a higher price? And the answer is yes. We're going to go confirm and send. Target, stop, and that's what is in red is reaffirming what we just said. Now, what I'm going to go ahead and do is send the order. Okay? So now we have this order, a stock trade that's sitting right here. Now, by the way, do we have any of you that like to do swing trades? Calling all swing traders. Now, Bruce is actually saying Holy Baba is running. Okay, let's take a quick peek. Let's pull up Baba. Now, Baba, what you're going to notice is that's one that's kind of a classic, right? Pushing to the old upside. The breakout was there. It actually then went to this level, okay, had some selling initially, and then went up to the next level. So you're right, it's kind of just taking these levels out, and this is why some traders like to kind of play these type of setups. Now, I'm going to hold Citi for just a moment, okay? I said I want to kind of talk about some financial stocks at least too. We're going to come back to this in just a moment. Now, what I want to kind of show you really in the meantime is I want to go back to, if you have not subscribed, if you said, hey, James, I normally don't come to this class. Is this every week? Is this recorded? Is this a live recording? This is a live recording. It's also posted. So you could actually follow us right on and subscribe right on YouTube. This is our channel. When you click on the link that I sent you, right in the middle of the page, it will say subscribe. Subscribe does not mean you pay. For our channel, it is free. Now, when you subscribe, what you're now going to notice is there's some short videos, which I'll show you in just a moment. There's live, which we're doing now, and there's also playlist. So Barbara, she teaches her classes, and so she will have, think of the playlist like a channel. And Barbara has her own TV channel. And if you watch her TV show, she has episodes. So think of it like that, okay? Liken it to what you already know. Now, for this class, if you say, well, do you have a playlist for this class? Yes, okay? Just like when Barb teaches, she's teaching a set time, and there's episodes of the classes that she teaches, likewise on mine. So you could just bookmark this and say, what are my favorite TV shows on the YouTube webcasts for Schwab Coaching? And that way you could actually just bookmark them and you could actually see them. Now, I also wanted, so these are kind of longer videos, longer content, 45 minutes. I'm not sure if that's long, but sure. Now, you're also going to notice if someone said, James, do you have any shorter videos? Yes. Now, one that I want to kind of show you just real quick is if you go to the shorts. A lot of people like to kind of see shorter content. If we go to, let's say, where it says shorts, there is a video that's actually really done. How did the market respond to poor economic data? That is this video right here, and I would ask you to watch that, and you're going to see kind of get a flavor of what is it like to watch a YouTube short, and how do we also use those to support our longer videos. That was done by Brett Crowther, and he actually talked about, with that poor economic data, which sectors could be influenced by lower interest rates. And we discussed that last Wednesday and Thursday. Brett also includes some commentary on that as well. So watch that. Now, just real quick, as we hop right back in, I'm going to pull up this chart. Now, if I were to ask you just real quick, on this chart, what type of potential price pattern do you see on the chart? Now, my eyes are kind of focusing a little bit on that right edge. And if we take a look at this, we're going to kind of see that there's these green dots. And again, let's go back to that hallelujah, okay, right here. And if we take a look at this, what you're now going to notice is we kind of have like a horizontal resistance. And if those lines are getting higher, if they are, okay, that just means that we're making higher lows. And it also kind of tells us maybe on the downside, what you're now going to notice is it's not impossible or unlikely to think that, for example, that maybe the MACD is not going down as low or staying down, but the MACD momentum is increasing over time. Now, some investors are going to say, yeah, I want to see it break out, and now I'm going to get in when it pulls back and it bounces. And that's when I'm going to get in. And that's maybe also how they say it, okay? Now, some people say, look, forget all that, okay? I'm going to at least get in some now, and then if it runs up, pulls back, and bounces, then I'm going to buy the other half, okay? Now, if we take a look at this, the reason why I started laughing is when I lived in Innsbruck, Austria, which if you've never been to Innsbruck, it's a beautiful place. It's like Salt Lake City. And this was during Christmas, and this lady, her last name was Cole, and she said, hey, you and your friend Danielo yonder from Dresden, Germany, she had me of all people, with my friend, okay, sing in front of a Catholic church mass as we were there in that local area, and we were just kind of celebrating Christmas. Oh, man. She says, James, anyone can sing, and surely you and your friend can sing. Well, the look on her face as we were singing, I could tell we were letting her down, and she was second-guessing what she was saying. At the very end, she goes, hey, you and your friend, you don't need to come back next week. You were dead right. You can't sing worth a lick. So when I sing, I always think back to that. Now, a couple years later, I came back, and I was going to tell her that I had forgiven her, that I had gone through counseling and therapy, and I had gotten over that letdown in my life. She had since passed away, but I forgave her. She kind of popped my self-image, but I told her I couldn't sing. I was being truthful. It's pretty embarrassing when it's in front of a couple hundred people. But if you could have gone back and seen that video on my Twitter page, that would have been pretty funny for you. Now, if we take a look at this, aren't you glad you're not me? Now, what I want to do in this case is I want to go back and let's imagine someone says, James, I like stock because it's more dollar to dollar, okay? The stock goes up $1, I could potentially be up a potential dollar. Bad part, if it goes down, okay, the stock actually goes down, well, I could be down $1. So there's good and bad, okay? Now, what I want to do on this type of trade is I want to see if we can't trade an option that's a little bit more directional and has neutral time decay. Let me tell you what I mean by that, okay? When you look at an example like ALK, it has positive delta. We love that, especially if we get the direction right. Bad part about actually long calls is that boo, negative time decay. So it's kind of like holding a bucket where the bucket is filled with water. And in the bottom of the bucket, there's holes. And it's leaking water. And when the water drip out of the bucket, it's actually affecting the option price. And it's pushing that lower. The only way you could actually get that to go up, back up, or counter is you need the stock to go up to push up the option price and or volatility to increase as well. But that's the only way you can offset it. Now, there's some people that says, I wouldn't trade a long call. If it was, I would never do it. They just don't like negative time decay. Negative time decay, you could think of it as almost like paying interest on loans. You might not say, I don't like loans. I don't like to pay interest. Interest is like time decay, but on capital. Now, the biggest actually thing is what we're going to do is we're going to go to the trade page and we're going to type in C. And what we're going to now do is we're going to go to the October expiration and we're going to right click on the call. So first thing we like to look at is the at the money call and the at the money put. Now, when we take a quick peek of this, it's a 5-cent bid-ask spread, 10-cent bid-ask spread. We look at normally we like to see that narrower than 20 cents. It is. If it is, we're kind of thinking that maybe that volume might be there. And remember, volume is taking a look at the contracts bought or sold today. So if you bought 100 and somebody else sold 200, 140, they do not get netted off. They all count. So if you bought 100 and your friend sold 140, that's 240 total contracts. So option volume is really looking at activity, buys or sells. They're not netted off. Now, if we take a look at the open interest, the number of contracts that are still open, whether they're bought or sold, okay, and unexercised. So really, you like to kind of see that both of those numbers are high, okay? And if you take a look at this, we look at this side as well, the open interest is higher on the call side. Now, that could be a whole discussion by itself. Now, I'm going to right-click on that 97.5. We're going to go to the strategy where it says call or synthetic. Now, if we do a synthetic, a long synthetic, that just means that, hey, we're going to buy that call, okay? Now, if we bought the shares, we bought the call, or we actually do a long synthetic, the entries are all the same. The exits could be all the same as well if the stock were to go down to the downside and break support and so on, okay? We're just using a different type of strategy. Now, when you pull this up, what you're now going to notice is if we pull this up on the Analyze tab and we said, hey, what is, for example, the theta on this, you're going to see that it's almost neutral, okay? And that's really what the investor wants. As a long call buyer, if you buy a call, okay, you need the stock to go up. And if that stock consolidates sideways, right? Consolidates sideways, that is to the death, okay, financial death of that long call investor. Because that consolidation is just eating away at the option premium. So a consolidation isn't bad, okay, but it's not great for the long call investor. Some investors, they say, look, I want to do something that is on the neutralizing that theta, that if we do get in a little flag type of situation, that I can handle that consolidation. Now, with every good, there's a bad. What's the bad part? The bad part is you have a higher delta on a long synthetic, and that's not all, and you also have the potential assignment for the shares at the strike price that you're selling. So whether the investor does a short put vertical, or a long synthetic, they need to fully understand, do you mind in buying the shares of the stock? And if the answer is no, then they might not do any of the strategies that I mentioned. If we do a long synthetic, can that short put turn into shares? Yes, even prior to expiration. If they are assigned to buy the shares, do they have to keep the shares? No. Can they sell some of them? Check the liquidity. They could. Could they sell all the shares? Check the liquidity. They probably could. Okay. So the biggest actually thing is, if it does become shares, they're their shares. They can do with what they want. They need to check the market condition and say, could I sell none, some, or all? Okay. Now, if we take a look at this, what I'm now going to do is I'm now going to bring up this trade. And what we're going to do is we're going to set a stop on this. We're going to go first triggers SEQ. We're going to right click on this and say create opposite order. So all we did here is we said first triggers SEQ. Okay. Then what we did is we right clicked on that green line and said create the opposite order. This is where the investor is just saying, I want to set a conditional exit. And the exit could be based upon a target price or a stop level or a trigger to sell if it were to go to the downside. Now, what I'm going to do is on that conditional order, we need to change this to a market, day to a GTC. Now, this is very important. You actually look at this. If we said, well, where is support? Well, we got support right around 95.32. Are you with me? 95.32. That's right where my pencil is. Less 2%, it's going to give us an exit at 93.41. 93.41, okay? Now, what I'm going to do is I'm going to come into this, and just over here on the right-hand side, click on the gear. For this moment's sake, I'm just going to say, look, C method mark, if we get less or equal to 93.41? Type that in. And by the way, it's okay to say, James, this really confuses the heck out of me. I can't always remember. Don't worry. Because if we type that in, it's going to show it to the downside, but in written form. If the mark price of the security is less or equal to 93.41, it's going to trigger sell. Now, you might be kind of wondering, well, I don't really know what that's really going to be. What's the potential loss? Well, if the delta is 100, like shares is 100, you're now going to notice that the risk per share is about $4.36. That's the stock movement. How do we translate that to the option? Well, we times it by the delta. Okay? That's the stock movement. This is if the stock went down. If we had a delta of 100, the potential loss, okay, $436. Could it be bigger? Yes, it could. We don't know what the spreads are going to be. But the forecasted loss to position size is 436. So all I'm doing is I'm saying if the stock price is 97.37, we're going to say exit if it goes to 93.41. How much is that? Well, that means the stock went down 436. Translate that to options. Times it by the delta. On this strategy, the delta is 100. And now what you're going to notice is $436. So now if we said, James, I normally risk $500, how many contracts would we be doing? The answer is 1. We normally actually risk 1,000, we'd be doing example given 2. Now, what's the difference between this and stocks? Number 1, there's an expiration. Number 2, we got a bid-ask spread on both sides, call and put. And the third one is we actually don't have the claim to the dividend. Okay? And so here we have a right to buy the shares at the strike price, and we have an obligation. Okay? But we're trying to use those options to, the keyword is synthetically replicate the profit loss diagram without owning the shares of stock. Now, if we did this, let's say in the margin account, and we could do something similar, let's say also in the IRA, how much money is being set aside to do the trade? $23.59. If we did like a short wide put vertical with a long call, it would be very close to that 23.59 as well. So some people like to leverage that trend, okay, not just with long calls, but also with long synthetics as well. I got to wrap it up here. Just a couple things I kind of want to say that we're going to keep an eye on. We're also going to keep an eye on, for example, we said UNH, we're going to keep an eye on Goldman Sachs. We just did the example trade on Citi. We talked about Meta. We're going to keep an eye on that. We're going to keep an eye also on MU, Micron. We're also going to keep an eye on last one here, Netflix. Okay? That's one that's kind of puckering up. Could actually this be one that's making a higher low that could turn into a potential higher high? Keep an eye on that. Now, I'm out of my time here today. I want to say thank you for your comments, your questions, and your participation. And also, if you're not subscribed, subscribe. Also remember that coming up next, we got Cameron May. Coming up a little bit after that is Barbara Armstrong. And we thank her for answering those questions in chat and also being a great participant here today as we talked about both leagues. So with that actually said, remember with what we discussed, it was done for example and illustrated purposes only. And this has been the class on the Investing Master Series. I want to wish you a great day. Stay tuned for Cameron May coming up next. Bye-bye.